Hello, this is CEO of Weisenbach Investments. Today I would like to review some short-term futures ideas for the next week or so. It's about a half hour to the opening bell, so let's just make this quick. Oh, already on ES. Whatever. Okay. Oops. Okay, so here is a 4-hour profile chart of the E-mini S&P 500 futures contracts. Let's go to about 4 months here. Okay, so this is 4 months. So as you can see, we're really near the point of control. The trend is down. I'll draw a line for you. There, downtrend. You see, here's the thing. You see the point of control right here. So it's bouncing around the point of control. It may trade in a range for the next week or so, bounce up and down. As you can see, it went under the point of control. Some volume eased up right at this area. And then here's the point of control. It boosted it up. Lots of buying pressure. And then it's starting to boost down because it went too far above the point of control on the monthly profile, and it got pretty high up, and some buying pressure deteriorated, so it came back down. So we may trade for a range, but over a period of time, its support, I would say the support is around, the most powerful support would be 1226. But if it only hit 1288 and started going up, 1285 could work too. I would be long for the month. Now going down that much is unlikely. Now some of the low volatility is caused by these ranges. So market's only going to push it so far. So it's at 1359 and 1260. So let's just make it about a 100-point range, right? So it's going to fall within this range, so it's going to tick down slowly based off how the market's pricing it. So, since this range is so small, if it gets to this price, it'll start moving up. Now the thing about that is that the way the market works, it's very unlikely they'll move back up based off some Elliott wave studies that I can't really go into on this program. This is think or swim. My Elliott wave study program can't bring up the futures contracts, but I could probably get the SPYs in for you. So let me open up this here. Okay, so here is my Elliott wave charting software. It's on my web browser. So let's look at the SPY. It might take a minute to load. Now let me refresh this page. And thank you for being patient. Okay, the Elliott wave charting software doesn't seem to be working. I'll have to work on that, so I won't be able to show you my waves. But as you know, I've let you guys know that I track two technical indicators for the most part: volume, TPO profile, market profile, and the Elliott wave study. Now, so the E-mini, I would short that, but it's at a pretty short-term low. So if we look at an hourly chart, this is going to show up weird, but well, the hourly chart looks okay, but if you look at the minutely chart, yeah, So I would allow it to give it some time to have a bounce back off its lows of the day. Just here, so it has a little farther to bounce back. Okay, so next I would like to look at soybean futures, and corn futures are out of the question because of all the crazy stuff that's gone on. So they have been down today, and they're making a recovery off their lows. The Wall Street Journal reported this morning about how there could be a possible supply glut by the end, and I would agree that there is, so I would be short soybeans over a longer period of time. But what they said is the supply glut is going to be caused by farmers jumping on bandwagon. Now, soybean prices are so darn high that farmers are double cropping, and they're planting their crop. So it could, if all the farmers start jumping on a bandwagon, it could cause a supply glut in the price. So as you can see, this is in a correction. This is an Elliott wave thing. I can kind of show you. In a correction, the market will always go down, and then they'll have a wave up, and then they go down again. So what we're looking at is starting to top out, it looks like, around this range. So once it tops out, if it can get to here, great. I would short at 14.45. That's when to short, around this range up here. So as soon as you see any sort of sign of it losing momentum, I would short. Now, it's not going to get back up to here. Very rarely will wave B get somewhere. Excuse me, I have to make a phone call. Hello? Hello? Can I call you back? I'm making a video. Okay, bye, Sam. But okay, anyway. So I would be short soybeans over the longer period of time. I would be careful about the minutely chart, so it may let it come up a little bit on its minutely chart. And next, I'm going to look at corn futures. In the newsletter, I recommended to buy corn futures. I got long, took about a 3% profit somewhere around here, about $1,000 in gains there. But I would get out of corn pretty soon, not because of the fundamental picture, because the fundamentals of corn are wonderful. It's driving the price up because of the heat in the Midwest. I'm in the Midwest right now, and it is burning over here. I wouldn't short corn because the fundamental picture is too great. But I would stay out of corn. As you can see, it hit its high here and it shot down on that day. But I would be careful in trading corn. Sorry, I have a little bit of cold again. It's summer. Why should I have a cold? Seriously. But next, I'm going to look at coffee futures. By the way, I just want to let you guys know I'm on my paper money platform right now. The reason for this is I'm testing out some strategies. These for Weisenbach Investments. I spend a lot of my time testing strategies. So, if you're wondering, oh, I'm fake trading, blah, 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 I'm just on testing out certain strategies that I could use. So coffee futures, I like coffee futures. I think the supply glut is over, and there's some issues in Brazil, and it's going to slow production growth, so it's going to drive the price of coffee up. The problem here is it got pretty high on its market profile, so the market's dumping it. So once it can make another correction around this range, I would start buying coffee futures. Okay, last but not least, I want to look at natural gas. Okay, I'm a little worried about natural gas because they're on this high profile. Now I'm thinking, I think there's supposed to be a report coming out today. That is the supply report, how much natural gas there is. So let's look at the economic calendar. Here we go. Okay, so today's the 28th. Yeah, EIA natural gas report comes out at 10:30. So I'm going to be paying attention to that at 10:30. So if it's good, I would buy. If it's bad, I would sell. And I'm going to recommend that to my customers based off what happens in that report. Personally, I'm a little worried because the market's setting itself up for a correction, so it could be a little worse because the market seems to set itself up. They're expecting a correction. Too bad we don't have short interest. If they had short interest on here, it would tell us a lot more information. So if there's a lot of short interest going on, which it looks like there's no short interest in futures, put to call ratios or whatever it is. But if traders are shorting, which it looks like they're not, the natural gas report would probably be pretty good because markets, things tend to happen based off opposite of traders. So because most traders jump on the bandwagon and go ahead, yay! Let's short, let's buy. So I think the market's setting itself up for a correction. There's less and less buying, but the price is still rising. So that means the price will have to correct itself pretty soon. And as you can see up here, natural gas is just down a little bit ahead of its report. There's not much going on because of the report that's going to come out. Otherwise, it's going to be pretty slow. So thank you for listening. I'm the CEO of Weisenbach Investments. We're a customized financial newsletter company. We cover short-term trading, long-term investing, and active investing. If you're interested in subscribing, just go to weisenbachinvestments.webs.com. Thank you for listening.